Hi everybody, Jeff Yasteen here. By the way, make sure to subscribe to my YouTube channel if you haven't already. I found it hard not to stare at my screen the other day as I watched oil prices turn negative. That's something you don't see every day. It's never happened before at all. Interest rates, of course, threaten to go in that direction, to go negative. Last month when the Fed cut interest rates to zero, and it had me thinking, what other major piece of the U.S. economy is also now set to go negative? And in a sense, I think it's going to be cars and trucks. Like oil and money right now, there's lots of supply out there and zero demand. Analysts at J.D. Power expect auto sales to plunge up to 80% this month. Bloomberg noted that used car sales fell more than 60% already just in the last week of March. And car manufacturers have upped their rebates by record amounts, and yet still they're getting few takers for obvious COVID-19 reasons, shall we say. So where is the investment opportunity? Well, I think there's a big one coming amid the rising calls for a federal cash for clunkers program similar to what we saw in 2008 and 2009. Ford wants one to happen. A Morgan Stanley analyst told Barron that he thinks a mega cash for clunkers program is already a foregone conclusion. But instead of a $3 billion package like we saw in 2008, 2009, this one could be up to $10 billion according to the analyst calculations. And he sees it driving up to $50 billion in vehicle purchases. That's basically about 4 million vehicles on a seasonally adjusted rate through early next year. Nor is it U.S. automakers who only want a cash for clunkers program. Germany's car industry has also gone to their government expressing one for their support as well. But the stock that stands to benefit the most from a global cash for clunkers trend isn't so obvious. It's this stock, Albemarle Corp. The symbol is ALB. Now, if you don't know the company, Albemarle is the largest producer of lithium in the world, as in lithium-ion electric vehicle batteries. The company expects a near 600% increase in demand over the next 5 years, and with a price-earnings ratio of 13, the shares are trading at one of their cheapest valuations in the last 20 years. Now, yes, Albemarle might seem like an odd choice in this case when markets are basically pricing fossil fuels at literally giveaway prices. But let's remember, car makers have already invested billions of dollars into their electric vehicle platforms, and they want and expect a return on their investments, and they might just get one courtesy of Uncle Sam. Just last month, GM said it wants to spend another $20 billion on new electric vehicles. That's in addition to a $2.3 billion joint venture they have going with LG Chem, the giant battery maker. Ford says it plans to invest almost $1.5 billion to refit two of its Michigan plants towards building autonomous electric vehicles. And as everybody knows, EVs are very much in fashion among all the car makers all around the world. So if you're an automaker and Uncle Sam is paying the bill, what kind of clunkers program would you and your shareholders want? Now, ironically enough, Senator Chuck Schumer, the Democrat from New York, proposed an EV-based cash for clunkers program last October, and that was long before the current crisis. And of course, it didn't fly in the GOP-controlled chamber, and of course, the White House wouldn't have supported such a measure either. But then again, economic catastrophes, just like we saw in 2008 and 2009, have a way of bending political viewpoints when there are lots of jobs and lots of votes on the line. And in my view, the worse the economy gets, the more vehicle sales plummet, the more that happens, the more economic and political incentive there is on both sides of the aisle for a supersized, to the max, cash for clunkers program with EV centers and lithium from Albemarle at its core. I'm Jeff Yasteen, wishing you the best of goodbyes.